David, just explain to me why the Traditum structure is different from a tax perspective.
The main difference is other private equity funds operate on an LP basis. So there is a pot that, and the client's investment relationship is direct with the pot. Think of it like a pint glass. And so the client invests in the glass, and then the manager of that pot of money will then invest that in the marketplace and successfully return the profits of those investments plus the original investment back into the pint pot, and then divvy it back up to the clients as a finite period per the investment agreement with the client. So from an inheritance tax perspective or a capital gains tax perspective, the asset class that the client is invested in is the actual investment structure, the LP, and that doesn't get business property relief or business relief as it's called. Because of the asset class is the LP, they can't roll capital gains tax into it. What we did at Traditum is effectively remove the pot, and through a nominee structure, design an investment where we, the manager, invest the client's money, but it ends up through our custodian directly through the nominee into the investment target. So the asset class is a business trading asset, thus it gets business relief, and clients can roll over capital gains into those investments as well, thus either getting a refund or mitigating capital gains tax as well.
So in my language, it's transparent for tax purposes.
Exactly. So the Inland Revenue see the transparent relationship with the direct investment target from the client. And it's that structure which actually gives us the ability to design and be bespoke for our investment targets, and very, very flexible for their business plans, and design and be bespoke investment strategies for our clients, because we're not as restricted, because we don't have one pot of each individual investment. With your background in tax, but now running our client service team, you'll be very interested in the types of tax which can be mitigated, or clients' affairs can be efficiently structured by investing through Traditum private equity as opposed to direct to the marketplace or with other private equity funds.
So the Traditum structure is actually quite exciting from a client perspective, because it gives them the possibility of qualifying for a whole raft of tax reliefs that they wouldn't otherwise qualify for.
So which taxes can be mitigated then? Because it's quite compelling, really, isn't it?
So if you look at a client making an investment into the fund, then potentially they could mitigate all three of the main taxes, so income tax, capital gains tax and inheritance tax, which isn't a bad combination, really.
No. And the thing I like about the capital gains tax rollovers is that because we are a multi-generational fund, and our vision is to invest clients and families' money for multiple generations. If they roll capital gains tax into our structure, and in their estates these investments are passed on and they're constantly reinvested through our platform, the capital gains tax doesn't actually ever trigger, does it? Because there's no capital gains tax on death.
No, capital gains tax uplift currently on death, so the inherent liability would disappear on the death of the first of the generations, and subsequently if they continue to maintain the same structure and the rules stay the same.
Yeah. So our clients can sell an investment with ourselves. So we the manager would take the client's money, invest it, and say we exited that investment and we'd roll capital gains tax into it. As long as we reinvest into it.
As long as we roll again, then the capital gains tax liability doesn't crystallise.
And does the same apply for inheritance tax?
Yes.
So as long as we reinvest within a 2-year period, then a client's investments with Traditum are always outside of their estate.
Yeah.
So if we add at these from a returns basis, capital gains tax on business assets currently after entrepreneur's relief of 10% is 20%.
Yeah.
And inheritance tax is currently
40%.
So invested clients are 40% better off from an IHT perspective and 20% better off from a capital gains tax percentage.
Indeed.
I remember when we first met and I was interviewing you, you said one of the things which really caught your eye about our multiple investment strategies was the agricultural investments which we can make in our agricultural partnership investment fund. And why was that? What was so different about that for you?
Well, I think that there's a number of things. Primarily, when clients are looking for a range of investments, part of that they quite often ask whether there's a possibility of investing in something that they understand, that's asset backed, and that they understand the valuation of those assets, and that produces a long term income and attracts tax relief at the same time. And you put all those together, it's actually quite difficult to find. But an investment in a tax efficient way into agriculture ticks all of those boxes.
So it's agriculture, but the point there, I think, is unique to Traditum is we can give clients the ability to invest in property, but it's agricultural property and it gets agricultural property relief, doesn't it?
Yeah, which again is a series of exemptions from inheritance tax.
Right, and you can also roll capital gains tax
into assets that qualify for agricultural property relief.
Exactly. So that if a client has a range of investment properties, say residential investment properties or commercial sheds investment properties, they're inside their estate, aren't they? So if they die, there's 40% inheritance tax to pay.
Generally speaking, yeah.
But so that's a real benefit from our agricultural side, that we can give clients that income and that asset backed, but with those tax
and
reliefs.
The tax reliefs.
Yeah.
So I worked in private client tax advice for a long time with EY and never really came across a structure that was quite like this. So how did this come about?
It was a long journey. Our founder was invested with normal private equity. When I say normal, the traditional LP route, and didn't like the lack of tax transparency, and didn't feel they had a connection with the investment that they were making either. So it was very arm's length. So I was approached to set up Traditum, to be the CEO, set up the fund and bring the team together, which we've thankfully successfully done, and have continued to expand the team, as you know. And I think nobody else has done it, because it's not impossible for anyone else to do it, but we simply innovated it from day one. We went to our advisors and with a blank sheet of paper and designed this structure, looking at similar structures, but being able to give the flexibility to investment targets, the bespoke nature of investment strategy to the client, and then all this tax transparency structure underneath. And it took 2 years to agree with the FCA that they were happy that we were doing everything within the regulated environment. So it just took a long time to build, and I think that's a big barrier to entry for other people to do it, but it was certainly worth all the hard work.
And just to be clear, the fund, if we call it a fund, is fully FCA regulated.
Yeah, fully FCA regulated. And also under the FCA regulation, we can offer 2 services, which again is relatively unique in the marketplace, that we can offer a discretionary managed service, which is the bespoke nature of trying to find an investment strategy for a client that fits what they wish to invest in. So it might be sector, it might be risk appetite. It could be them investing with their friends and what we call vintage. So that's a discretionary service. And then we also offer an execution only platform service, where clients have a client account and they have the ability to look at off-market deals. They don't have to invest if they don't want to, and they see sufficient of the deal to be able to make an informed personal decision whether they want to